Good morning, traders. It's Thursday, the 25th of August, 2016. It's 8:03 a.m. Chicago time, 9:03 Eastern. This is another Trader Bite, early nourishment for your trading mind. A way to set up your day. Hopefully, check your homework and compare ideas. It doesn't make me right. It doesn't make you wrong, but at least we're in it together. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news overnight, the most recent news is, of course, the preliminary durable goods orders that came out at 7:30 about a half hour ago, 4.4, much higher than the 3.4 expected. Durable X transports came in at 1.5 versus 0.4, also much higher. Initial jobless claims came in better, 261,000 versus 265,000. Continuing claims also slightly better, 2.15 million versus 2.19. Other than that, the German IFO came out at 3 Central, 4 Eastern overnight U.S. time for August. The number came in soft, 106.2 versus 108.5. Current assessment 112.8 versus 114.9. And then there's of course the bad news for Italy on the earthquake. I think uh, the death toll on that is around 247 people. These towns got devastated by a magnitude 6+ earthquake, and it's a bit of a mess and chaos over there. Wishing those folks the best to make their way through it. And then yesterday, the interesting action yesterday was in healthcare. Healthcare took a bit of a hit, and we'll talk about that in a minute here. But for today, not expecting too much overall. Looking at the S&P futures being down this morning. And so are the Euro stocks. The DAX is down 0.9%. The FTSE's down slightly. The Hang Seng slightly up. And the money looks like it's moving towards safety. I'm seeing red across my quote board for all the futures contracts that I watch, except for the Euro, which is up 29 pips to 113.02. Up 0.25%. The DAX taking the biggest hit right now, 1.11% down 117 points. Again, the confidence numbers that came out in Germany were not very good. Anyway, so it seems like money's moving to safety this morning. The market is trading 21.70 in the S&P futures. 21.69, just 5 ticks away, is yesterday's low after a pretty decent recovery yesterday after the sell-off. So some interesting stuff going on. As far as what we're expecting going into the session, the biggest thing you have to remember is that tomorrow there's the Fed meeting, meeting at Jackson Hole. And Yellen is expected to speak, and that's likely going to introduce some volatility into the market. So today may be a holding pattern for that. I know the Treasury's open this morning, and I was looking at the Treasury chart, and we'll look at that together here. Pretty much a snoozer. It's sold off a little bit, but it's also in a holding pattern. So overall, for today, we're looking at U.S. Services PMI at 8:45 Central, 9:45 Eastern, 15 minutes after the close. That's for August, expecting 51.8. Services PMI expecting 51.8. We get natty gas at 9:30 Central, 10:30 Eastern, expecting 20, and we're looking for Kansas City Fed manufacturing activity. That's not a huge important number or anything, but it's at 10, expecting -2. And we're looking for, after the market today at about 5:30 Central, 6:30 Eastern in the evening, Fed Speaker George, who's a voter, um, meeting up with other Fed leaders, and is expected to release some remarks. And then today there's a 7-year note auction valued at 28 billion at noon Central, 1 Eastern. Okay, so let's follow our habits and routine and look at what we expected yesterday. Yesterday, the market looked like it was setting up to rotate lower. By the time the market opened, it actually already rotated lower. It opened in the gap zone as opposed to higher, which is where we were when we did the trader bite. Same idea. The idea is we test up briefly, and then we're looking for an immediate test of 80.50. But the big target yesterday was 79 and a quarter. And I don't have that here. I have this MCLVN on top, but there's an MCLVN that goes below as well. That would be the extended target, which we ended up hitting. So the market is expected to chop around in the morning, test up, try to get into the prior day's range Tuesday's low, fail, and then chop some more because of the gap zone, and then rotate down and start moving down. And it's expected to be done. It was expected to be done in orderly fashion. Except that, you couldn't have anticipated the comments that the White House and Democratic nominee for president Hillary Clinton said about a pharmaceutical company that makes EpiPens that treat allergic reactions. There was some strong, I would call it rhetoric about actions that would be taken against pharmaceutical companies that are considered to be taking predatory pricing practices. The EpiPen, the price of the EpiPen, I think, has risen something like 400% or 700% or something like that. I don't remember. But there's a lengthy article. The stock that she spoke up against was MYL, valued at about $21.6 billion. And it basically pushed the healthcare sector down and led the market lower, with consumer cyclicals holding prices higher. That these consumer cyclicals actually held a positive close yesterday, with everything else lower. And that's where we got the extended move down from. We'll look at in a second. The secondary hypothesis was expected to chop, test lower first, but take on a bid and start moving back towards the top, and the target there would be 2190, which is the point of control. That didn't happen at all. Here's what actually happened. Not this. That's the Treasuries, the 10-year. There it is. So Hypo 1 was interesting. I actually traded on both sides. I anticipated Hypo 1, then I anticipated Hypo 2. Went over those trades in our AMA yesterday, but what we had is a small one-tick failed test of the prior day's range. Wasn't quite a failed auction. It started to look like a failed auction, but then the market came back, and it looked like it might squeeze higher, and it didn't. It started to fail through the mid, which is right here below the open, and so it created an opportunity for short in this area to look for a break and a continued extension down as the OS low gets broken, and it did happen. We did get the test of 2178 a quarter. Remember, the key target for Hypo 1, oops, it's not meant to be there. The key target for Hypo 1 was right here at 2179 and a quarter, so it pushed through by 4 ticks. A small bounce, higher low, and a corrective move back up. And then this is where the news started to hit here, and the market just moved much, much lower. We closed the naked point of control down at 2169.75 from August 17th here. So we're solidly at the bottom of this move. We're solidly back inside of the prior balance area. So let's take a look at that for a second. So here's where that 79 and a quarter target comes from. It is the point of control for this entire balance zone that we've been in since the beginning of the month. And that was our target. Here's our first test of it, a nice bounce there, and then it just could not recover back into the opening swing. We got the sell-off, and then we had a very quick bounce on the close, and that's the bottom end of the composite LVN at 2172.50. 2172.50, which is up against July's high of 71 and a quarter. 2171 and a quarter was the prior all-time high right before August started. So that's where we are. As far as we're trading right up against the low here. The market didn't make much of a recovery. The overnight high is just a tick above the closing high. It seems like sellers are still in control, which is actually a good thing for day traders, as long as not so great for someone who's swing long or something. But what happened here? Looks like my data's not didn't recover. It's very odd. I was just looking at this chart. So, as far as the overnight session, basically a lot of it's downloading, it's backfilling this data here, I think. Yeah, it's downloading this data. It'll be updated here in a minute. But the overnight session is showing a lot of weight to the downside. The expectation is that we're likely to continue the auction lower until, no idea why this is missing here, but the auction is likely to continue lower. The next key price to test. Let's look at that here. We're pushing into the FOMC from last month, and the next key areas to test below is the gap zone. Remember, this gap zone is really got filled in a little bit last Wednesday, but we still haven't closed it completely. Remember, there's a gap zone up above that existed up here, and that's gone because it's been tested from above and below. So overall, the next key price to test is the 2165.50 most recent low. If we get down there, we'll have a weak low, and we're likely to see a pullback and a continuation to 64.50 and to the other side of this gap zone. And then the big number below, the big number below is 2160 and a half, or 2160.75. Where does that come from? It's when we extend this other major profile forward. It's the next point of control. So if we're starting to push into July's balance, this really awful choppy trade that we had in July, that's what we're getting into as we push lower. The top of it is around 72.75, and we're trading 69.75. So we're looking at that becoming the next key area. And if I extend this forward so that we build the profile forward here. So we did a lot of trading at the top here. You could see that point of control starting to build, the HVN up top starting to build to the point that it might shift the point of control forward, and there it is. There's the shift, moving up to 2179.50. So we have a very clean and clear double distribution profile. Again, 2172.75 is really important here. As long as it continues to remain below it, then our target becomes that MC point of control below at 2160.75. I know this looks noisy with all these levels, but we have a lot going on in this area because we've spent the last almost 2 months in it. But 2160.75 becomes really key below if we start to slip through this gap zone. It makes formulating a plan for today really tough because the market dipping down has been bought up over and over and over. And it's you almost want to see how it opens and which side the aggressor is before. Um, yeah, I have no idea here. It's hard to analyze a chart that does not have the data in it. Um, but overall, it looks like the continuation on the downside for this morning. So my primary hypothesis this morning, just to conclude here, my primary hypothesis is likely to be move down, test the top of this zone, attempt to push back. I'm looking for it to push back through, get into the gap zone, and then start working itself back to 79.50. This is the first test from above. I'm expecting it to be rejected. That's my hypo one. So I'm expecting overall a day where we do uh, continue to push lower, but I'm looking for overall the trend to be back on recovery. Remember, yesterday's drop is on news. That's a factor as well. And so we have to be careful not to lean on that too much because it's not based on the fundamentals of the equities underlying the S&P 500. It's based on news within a sector. So overall, I expect that the market will push through this overnight low, get close to the gap zone, and then find its buyers, and then start to rotate up. And then in that case, 2179.50 is the target from below. Okay, so that's the primary hypothesis. The better trade is for a choppy open in range, just on edge, push back up towards this MCLVN, maybe 73 or so, and then start to work its way through and down into the MC point of control. That's the opposing trade. That is, if the market is unable to find those buyers, the only option this auction has, as it normally does, as a normal auction does, is the only option is to start advertising prices lower to motivate those buyers to step in, to seek those buyers out, and that would be number two. And if this action occurs, it's likely to occur in the first 2 hours of trading, and it's likely to be quick. But again, just remember that we're preparing, or we're looking for remarks, important remarks from the Fed tomorrow, and so the big money's not likely to commit too much to today, and of course there's likely to be hedging and all that good stuff going on. Just watch your risk, continue to be picky about what you do, and don't get complacent by letting trades that are supposed to risk just a little bit of your account become massive holes in the ground, and sucking all of your account in. That's something I'm continuously seeing, and it's just not a smart way to trade. Hit the like button, please, before you head out. I'd appreciate that, and I'll catch you tomorrow morning. Take care.